Welcome to Java. Thank you kindly for joining me. It's February 17th, 2025, and it is also Monday. The markets are closed today for President's Day in the United States. However, they are open in both Asia and Europe, and there is a tremendous amount that is going on. So we've got quite a bit to cover today. So thank you very kindly for joining me as always. Let's get started in with what we're to expect the calendar this week. Now, as I said today, President's holiday has closed the New York markets. So we've got quite a few Fed governors, Fed presidents speaking today. We are expecting some numbers and reports coming out this week, and we're going to pepper them in with these speakers as well, as always, to manage the markets. Now, Empire State Manufacturing on Tuesday and home builder confidence. On Wednesday, we're looking at housing starts and building permits, really. So we'll get the Fed minutes from the FOMC meeting, last meeting. That could be a mover as it would give forward guidance on whether they intend to cut. Looking at Thursday, we're going to get some jobless numbers. Manufacturing, we're going to be looking at the economic indicators. And I'm going to talk about all of these in a bit. We're getting PMI on Friday, which could be the largest day of really actual data that we would be getting, as well as consumer sentiment. Now, all of these you can kind of put inside a bucket because there are larger movers that we're going to talk about today. The first one starting with this. Now, this is from an article from Politico. Now, this is from Ludwig. He used to be the comptroller of the currency. So, someone that is actually in the know of how the spend is going on. And the headline says quite a bit that voters were right about the economy and the data was wrong. Now, we've been saying a long time that the data is either juiced, coming from the wrong side, and also skewed in multiple ways, depending on what the report is. Now, this is focused mostly on spending, retail spending, the inflation, and employment. So, as we're always talking about looking at real employment and the real economy, as I like to say, because it is distorted from what they have been putting out in their reports. And what he goes in to say is exactly what they have been doing in order to manage the inflation numbers. They use items that people are not purchasing on a daily basis. So, for instance, the items that you are using for your food, such as eggs and milk, are not being counted in this larger basket being skewed by things that are not purchased so often. Now, they've taken out energy as well for these inflation numbers, and that does tend to skew what people are actually paying on the streets and what they come out with at the end of the month. Now, there's a masterful game going on, and how this masterful game is working is that they are increasing people's wages and pay, but not to meet inflation. So, in real terms, people are losing money monthly as this inflation is going on, but it looks like their pay is increasing. So, the psychology behind it is that they're not going to be up in arms as it appears they're making more. However, let's look into some of the things that are going to pull this curtain back quite soon. Now, first off, I wanted to mention large story coming out. Elon Musk encouraged to crack open Fort Knox and audit Fort Knox. This is to get an actual viewing of the gold reserves that is claimed to be held there. And Rand Paul has kind of chimed in saying that he would like to be there as well and that we should audit Fort Knox to be sure that the gold is there. Now, the last time that Fort Knox was opened was to Steve Mnuchin. This was the last Trump presidency. So last time anyone has been in there. So we're looking at a lot of what is going on, the undercover corruption that has been going on in the United States government, as well as audits of all of the federal departments. Now, behind us, we've got a lot of pairing of government workers, if you will, the latest being hundreds of CDC employees going to be laid off. The latest round of firings, they have been letting go probationary employees, and more federal workers are expected to be laid off soon. So this is going to hit the real employment uh, force, if you will, because all of these people will be looking for work in the force. Now, this will be kind of watered down, if you will, because they are being offered severance for the most part of several months. So we're not going to see this immediately, but more likely a few months down the road. So I'd like to look at the other side of this, and this is what is driving inflation is all of the government spending, so that will take a lot of that down. But the real economy and the real inflation we are going to be paying is also in part to tariffs and the price, if the reports can go back to reality on what we're going to be paying for the price of goods and also imported goods. So, with this, I would like to speak a little bit about the main import partners for America. Now, I took this uh, graphic from Markets Briefs Pro. He's very good about a lot of his data, and this is a very good visual to show our largest trading partners. Now, you can see Mexico and China. So, with the latest uh, rifts in tariffs, if you will, and then also with Canada, larger trading partners. Now, this is not a breakdown of the goods that are imported, exported, but you can see how they are weighted. Now, the interesting thing in this graph, you can take a look at the two larger ones aside from the top three, is Germany and Japan. Now, Japan is rather frightening because they hold the largest amount of United States uh, debt. So, with them holding the large amount of debt, and Germany is driving Europe, we've got a couple of other things on Germany that I'd like to speak about in a bit. Now, we've got South Korea, one of the larger ones, Vietnam, and Taiwan. So, noticeably, all other European nations not even mentioned here, but rather with the rest of the world. Now, for South Korea, they're trying to guide their US trade policy, a little bit concerned about this, and they are putting that above even their own domestic politics as far as what is important for their economy. That's how large this is. Now, if we swing over to the change in imports of goods that are tariffed, now we've got two major divergences here. The first one is these are the world imports minus China, and the red line is China. So, what this is saying with the imports, the United States is now relying more on other countries than they are on China. So, there are a lot of negotiated deals that are going on behind the doors, if you will. So, along with this, they've got their own version of their MAG 7 for their stock markets. A lot of their larger companies, now notably Baidu is one of them. President Xi over there did have a major meeting with all of them, and Baidu's CEO was not present for this. So they took a huge hit, 7% drop in their shares. Now, what is going on behind this? This is very similar to when Trump signed the CHIPS, well, Biden signed the CHIPS Act, Trump signing the Stargate with the new companies and who's going forward. So this is how the spending from the government is going to go forward. And this is really hitting critically some of the larger companies there. They're all party owned. Okay, I would like to go into Europe now a little bit more with all of the talk that is going on between the peace talks. We'll start with that. That's the European defense stocks now hitting record high. The government bond price is falling because they are going to be doing much more military spending now. Why would they be doing much more military spending when there are peace talks in the deal? And this is because they're having continued missions that they're going to be funding, and it is another way to inflate from the government will continue to spend. This is from the euro side. So United States setting conditions for Zelensky's meeting with Vance in Munich. This is because he's not meeting directly with Donald Trump for number one. Number two, they are setting the guidelines and they may not be welcome to the table in the overall negotiations. So that will be something interesting to watch forward. It will affect markets depending on what they do coming forward as early as this week. Now, I'm not liking a lot of the underlying factors that are going on behind the markets. There are a lot of things like this that could easily swing them. They're headline driven. So we'll keep an eye on this daily. Now, I would like to speak about Germany a little bit here because they're such a large partner. This is the industry decoupling from global expansion. Now, what this line is telling, this is Germany and their expansion industrial production. We know that's tanking. It's been in the potty, but this is a good visual versus the global industrial production of what we've been speaking about. Now, if Germany is indeed the powerhouse for Europe and also main trading partner for United States, they really need this bolstering. Now, a couple of things that could help them is these current peace talks and increasing their energy ability to attain less expensive energy, moving them off the green policy, which has really tanked them. So gas prices in Europe plunging after a 2-year high. This is a couple of years in the works, and you can see how the prices are going down right here. And if they continue, this is going to give a little bit of breath of life first to Europe, but mainly also to Germany. And if they do so, that could help their production, will bolster not just the euro as much as they're fighting against the United States, would be very good for them. So moving over to your EU, they are in the back end talking about needing a permanent CBDC, central bank digital currencies. This is what it's all about. In the back end, are going to shift to cryptocurrencies. Also, their artificial intelligence will be wrapped in. So, still headed down that path. We've got United States and Russian officials to meet in Saudi. Now, this is to discuss the Ukraine-Russia issue over there, and that will be a major guide forward for all of that sector, the defense spending, all of the defense stocks, although there are still promises to Israel that there will be further spending. Now, another interesting thing to note that I would like to bring forward with Germany is that there are two major weaponry factories that are doing really well, that will continue to do well. One of them is Rheinmetall, and that one should get a boost, as ironic as it is, because they will be the continuing peacekeeper through manufacturing weapons. Now, they are going to bolster defense spending as will be required in order to continue with NATO. So we've also got Costa saying Europe needs to negotiate a new security architecture, in air quotes, with Russia. This is EU Council President warning that they are a global threat, and that is a little bit of off the side there. That will be negotiated down. However, the backline of that is that they will continue to produce this weaponry in the name of needing this defense spending, so that will continue. And then I wanted to bring up this last article prior to leaving you off, why gold and silver might be the worst investment for modern times. So this article goes into saying that there are much better investments because they have higher returns. Pushing this type of lifestyle and this forward psychological, if you are not investing in what they're pushing, is cryptocurrencies, mostly meme coins, as well as the higher leveraged stocks. So this is the forward thinking, if you will. I think it is absolutely ridiculous personally. Gold and silver, if you look at them on the back end regarding inflation, are doing much better. Now, there are better performing, but at this point in time, the boat is really weighted against the other side at this point in time. So it looks to be, while these two are at um, resistance at the moment, looks like they could have a pullback. They are definitely have the ability to have a breakout. If they do, would be a squeeze. So we'll keep a watch on these as well as other things moving forward. So until I see you again, my friends, have a wonderful rest of your day and stay free.